So welcome, first of all, to Creating Financial Freedom for You. My name is Bola Sol. I am a finance coach. I studied mathematics and finance at university. And although I've gone on to work in the financial sector, in the finance world, one of the things that I notice all the time is that personal finance isn't discussed. So one of the things I'm going to start by talking about is the facts and stats that I think are very important for you to create what you feel is financial freedom for yourself. Now, along the way, something else I want to say is please feel free to ask questions. I will be popping in and out of the chat to see if there's any questions that you have in between each section. So today's table of contents, some of the things we'll be looking at is stats, the stats and facts, property, stocks, business, and cryptocurrency. So these are potentially areas you can get into as a way to boost your income or retire a little earlier than expected. So that's some of the areas we'll be discussing today. If anyone has any questions after each particular topic, then please let me know, put it in the chat function. And of course, there will be a Q&A at the end if you'd like to ask any questions. Let me just see. Oh, thank you as well. I haven't actually included it in the presentation. Thank you, Kaede. I wrote a book called How to Save It, which is available on Amazon under Murky Books and Penguin. And it's a very concise financial literacy book. Some people may think that it's quite basic. However, I think the basics is where you need to start always. It's very easy to talk about financial freedom, but until you have the basics in place, then you don't necessarily want to jump to the next level. Right, let's look at some stats and facts. So 34 is the average age of the first-time buyer in the UK. It's 6 years older than the average first-time buyer in 2007. And 33% of Brits own shares. That's one of the things we're going to talk about today. We're going to talk about the stock market, of course, as well, cryptocurrency, as that's quite big now. And 2/3 of the population say they plan to buy stocks and shares in the future. If that is something you haven't gotten into yet and you're thinking about, I'm going to make sure that these are some of the aspects that I cover. One thing that I want to make clear is no investment advice or financial advice is being given. This is just about information that's available for you so that you can go and create the steps you need to create the future you want for yourself. Some more facts is the current state pension age for men and women is 65, and by 2028 it will be 67. So it keeps pushing further and further back. Now, for me, I look at what I want my life to be like then, and I want it to be a choice of whether or not I work, which is why now I'm making a lot more conscious decisions with where I put my finances. And I hope after today, and even before it, you do the same. And the number of people who have bought cryptocurrency in the UK has increased by 558% since 2018. And that is just when 3% of the population owned cryptocurrency. So we can see how much of a market has boomed there. But one of the things I must say about cryptocurrency as well, and it's always important to remember, is that it is unregulated. So if you lose your money, there is no protection against it. Before we go on to property, are there any questions? I will make sure that I have a look again in the chat in a moment. However, I will move on. So property, I'd love to ask, and please use the chat for this. How many people have a property or are interested in property? Please do let me know in the chat. Now, something I want to talk about. Okay, lovely. Alicia said, I have one. Let me know, is it that you'd like to get into property more? Would you like to invest in properties? Do you see it as a form of retirement fund? Or is it just necessarily for somewhere for you to live? Do you plan to own one home or multiple homes? This is something to think about, and just write in the chat, so let me know. So 3 reasons to get into property. Number 1, of course, is additional income. So after mortgage payments and overheads have been paid. So potentially if you get your first property for yourself and you're living in it, then of course that just means that it's not making any money. But if you had a second bedroom, for example, and you choose to rent that out, that is additional income that can come in. As well, there are buy-to-lets where, of course, you don't necessarily need to live in the house. That requires a 25% deposit of the value of the property, and you can make money that way as well. So that's one reason to get into property. Number two, you can build equity. And for example, you can remortgage and use the built up equity in your first property potentially to get another property. So that's something to think of as well. And number three, of course, capital appreciation. I know many people, many of our parents in our generation, let's say they bought a house and that house was initially worth 150,000. It's now gone up to maybe 450,000 or £500,000 because these areas have gone up in value as a result of gentrification. So that's something you want to think about as well. An area you might be looking at, it might not be an area that's quite visible at the moment, but you never know. It could be an area that is up and coming and will go up in value in the future. So that's something to think about. I don't have much knowledge on syndicated real estate, so it'll be very interesting, Emmanuel, to have a look at that. A few people have said they're interested. Let me just look at the chat here. Okay, want to invest in properties, definitely interested in real estate, fantastic. Yasmin said she's interested in buying by 2023. I'm about to go into some first-time buyer schemes for anyone who hasn't bought yet. More serviced accommodation and student letting. Yep, that's very popular. I have a rental which I'm looking to invest further into. Multiple homes, just in the process of buying the first one. Fantastic. There's also questions in the Q&A tab. Thank you very much. I will come to that. I'll come to the Q&A tab at the end of this particular session. So I want to get into first-time buyer schemes. So there's the first home scheme, which offers homes at a discount of 30%, a 30% discount compared to the market price. And this could save each buyer an average of 70,000, making deposits and mortgages more affordable. So that gives you a great discount. I think something to be wary of is it's a new scheme, so there's potential rental restrictions. So I actually looked at one of these schemes through something called Pocket Living, and they had, I believe, 1-bedroom apartments. And if you wanted to get two and rent out the other room, they said, no, this is strictly for people who needed a property and needed their own space. So with certain schemes, you want to make sure that you are able to actually rent out the room if that is something you want to do as a way to subsidize your mortgage payments or just have additional income in general. Now, the Help to Buy scheme, I saw that somebody said that they wanted to get into the property ladder in 2023. If the Help to Buy scheme is something you're looking at, then make sure you think about the fact that by March 2023, the Help to Buy scheme should be coming to an end. So with the Help to Buy scheme, you can get an equity loan towards the cost of buying a new build home as a first-time buyer. So you can get an equity loan of up to 40% for those of you that are based in London, and those of you that are based outside of London, you get up to 20%. So you want to think about that as well, your affordability, and all you need is a 5% deposit to get started, irrespective of whether or not you live inside or outside of London. So that's something to consider. And for the first 5 years, it's 0% interest, which is a fantastic way for you to work on your career and move up the scale and hopefully pay off the equity loan. And as I said, the scheme ends in March 2021. So that is something any of you want to consider if Help to Buy is a scheme that you are looking at. Shared ownership scheme is another very popular first-time buyer scheme. So it offers homes at a discount of 30% compared to the market price. Apologies, it's that should have changed. But in terms of shared ownership scheme, if anybody isn't able to potentially afford a mortgage at its normal price, then you can put down a lower deposit. So I've heard of deposits as low as, for example, £4,000. And if you want to stay in London, but what it means is that you will only get a percentage of that property. So for example, you will part own 25% of the property as opposed to 100% and staircasing your way up. So the advantage of that, of course, is a smaller deposit, but the disadvantage is it gives you part ownership. And I would suggest personally, especially when it comes to shared ownership, doing a lot of research because it can work for some people, but you really want to look at your circumstances and say, is that something I want to do? Because the housing association that you go into agreement with, you want to make sure that they do give you the freedom to staircase up as you please so that you can have 100% ownership of the property. As well, affordability is something you want to think of, even if you're staircasing up, just because you can afford 25% currently, do you feel like you'll be able to afford 100% as you staircase up? So I was offered a 3-bedroom home in Hackney, and I'd only need to put down, I think, for example, a £12,000 deposit under shared ownership. But then I thought, okay, how does that change? How does that deposit change if I decide that I want to own 100% of the property? And will I have an additional 36,000 to put down later on? So these are the things you want to think about with such schemes. And then there's the deposit lock scheme, which is starting soon, and it's a mortgage indemnity scheme, and it supports 95% loan to value lending on new build properties in England. So you can purchase properties up to 750,000 with a 5% deposit. The thing to be very wary of is the scheme charges interest immediately. So you want to make sure that this works in your favor, that you are doing your calculations and making sure that this makes sense for you. Before I go on to stocks, one of my favorite topics, I'm just going to check if there's any questions. Shared ownership is not a good idea. I try to leave my personal comments out of that, but I do also feel that I don't agree with shared ownership, but I understand everybody has very, very different circumstances. Apologies. Did I say March 2021? Apologies. I meant, so I think somebody's referring to the Help to Buy scheme. It ends in March 2023. Apologies if there was an error there. Let me check the Q&A tab. Okay, Rosemary said, I wouldn't exactly say shared ownership is not a good idea. It's subjective, absolutely, and it's best you look into it and see if it works for you. There has been success stories as well, which is why I always say look into it for you and make a decision, because people can also look at the Help to Buy scheme and say, I don't necessarily want an equity loan that I have to pay back in 5 years. You want to make sure that you're doing your own research and looking into each story in each situation and saying, is this something that I'm willing to put my money down on? Yes or no? Only you will know that. No one else can know that for you. So make sure you're doing your research prior. Q&A, let me look at some of the questions. Do you think CBDC would reduce the appeal of cryptocurrencies as investments? Could you go into this acronym of CBDC, please, when we come to cryptocurrency at the end? I've read that you're more likely to get better returns from REITs, which is real estate investment trusts, rather than owning multiple properties and leasing out to others. What are your thoughts? I like the idea of investing in REITs, and I have looked at the figures. I personally do think you can get better return without having to do all of the physical work. So that is something to look into. However, as a country, as the United Kingdom, I think we are very stuck on the old school way of making money through property as a result of what our parents' generation and older generations did. However, the returns aren't as high as they used to be anymore. So I do think REITs, which is real estate investment trusts, is something that more people should look into. It could potentially mean more returns, but with less hassle. How difficult is it to buy a house in the UK if you're living in Africa? What are some of the requirements? Well, first of all, one of the requirements, I believe, is that you have to be living in the UK. Anyone correct me if I'm wrong. I know some people do invest back and forth, but you might want to look into the requirements of that. I'm not completely sure, but I know some people who have bought property and they don't live in the UK full time, but it might be different circumstances. So I won't be able to give a definitive answer on that. Any advice on how I can own a property in the UK if I'm working in Africa? Once again, please look into the requirements of that. And any key advice on owning properties in Africa whilst residing there? That is a little bit of a different topic that I have covered every now and again, but I think it's quite tricky to discuss on here, and a question I wasn't, in all honesty, ready for. But nonetheless, make sure you look into that, how to invest in Africa, because I know there are, it's quite different. I was referring to central bank digital currencies as the UK and EU are exploring introducing these. I'll come back and answer that question during the cryptocurrency section. And what are the best locations to own a property in the UK? Yeah, well, I guess it depends very much on if you're doing it for location purposes, not location purposes, apologies, if you're doing it for investment purposes. So that's one of the things that you want to think about. So if it is for investment properties, then it changes, because London right now is quite overpriced when it comes to getting a property. So you want to look, is it for rental income? Is it for capital appreciation? These are the things that you really want to think about. Right, I am going to go on to stocks quickly. Give me one moment. So some of the places, quickly to go back into that, some of the places that I have been told is a good place to actually look into investments is areas like Leeds, for example, Manchester, although that is not necessarily an up and coming area, that's already quite prominent. So that's something to think about. But I would also say have a look, because it really depends on what you're looking for. Is it rental income? Is it capital appreciation over years to see how much your investment grows over time? So that question, it varies slightly. So let's look at stocks now. Now, one of the preconditions I'd like to talk about when it comes to investing in general, whether it's stocks or funds, anything, even if it's cryptocurrency, property, this actually applies for all, is make sure you have your emergency fund and your savings. So your emergency fund, a minimum of 3 to 6 months of your expenses you should have available to you. And reasons to use an emergency fund could be job loss, it could be car repairs, it could be unanticipated travel, for whatever reason, it could be personal reasons. So think about that. And then, you know, savings are for medium-term goals. So if there's anything you want to achieve in the next 5 years, think about where you're putting your money. Are you getting the best rate of interest? Probably not, because right now, as we can see, based on the base rate, we aren't getting the best interest rates for our savings. However, that's why some people do invest, because they see their returns go further over the years. Now, something I want to quickly show you is you need to understand your risk appetite. And I'll come to some of these tips a bit later, but something I want to stress when it comes to stocks and investments is you don't want to operate on FOMO, so the fear of missing out, and you don't want to be chasing a hot tip. You want to make sure that you are doing what's best for you and your financial situation. Everyone has different levels of risk. So be clear on what your risk appetite is before jumping in. So some people have minimal level of risk, but that means that you're also fine with minimal or low returns potentially. Low level of risk and moderate level of risk, or neutral. It might mean that you're looking to achieve high returns, but you're not willing to put in as much money, as much of your savings, for example. And then you're willing to accept a high level of risk, so you're a risk lover. And if you're willing to accept a significant level of risk, and I would say this is for people who put a lot of their money in cryptocurrency and have no other form of savings, then that's someone who is at a very high risk level alert. So when it comes to any sort of stocks or funds or any investment you make, you want to think, what is my risk appetite? What am I willing to do in this current period of my life? I would say about 5 years ago, I was more willing to be riskier with my money. Whereas now that I'm getting older, I say to myself, no, I'm going to take time. I might not put as much money in a particular stock or a particular fund, for example. If I feel like it's high risk, high return, I'm more leaning now towards more neutral investments. So I want to talk about a popular investment strategy, and this is the pound cost averaging investment strategy, and it can work very well. So it's when you drip feed money into shares or units on a regular basis rather than committing a single larger lump sum. So an example would be an investor with 1,200 investing £100 a month over 12 months instead of investing the whole 1,200 at once. Because I will say, in all honesty, if you want to see significant returns on your investment, then you have to think about how much you are putting in and on a regular basis. So pound cost averaging is something I would advise you all to look into, because I think it's a great way to get started and to just make sure that your portfolio is adding over time. Some people have even done that with things like cryptocurrency. So somebody told me they were adding money into Ethereum bit by bit. Any returns they were making, they were adding it in as well. So that's something to think about. Now, I want to quickly talk about investing platforms and fees involved, because there are a lot of investing platforms, but you want to make sure that you are using the one that's best for you and the one you feel the most safe and secure in. I would love to know in the chat function, please let me know, for any of you that are investors and are investing yourself, Do you use any of these platforms? So some of the ones listed here is Trading 212, Hargreaves Lansdown, Revolut, Freetrade, DeGiro, and of course there's Vanguard as well, which will be on the next page and I'll talk about. And just to let you all know, this is if you'd like to do it independently. Of course as well, you can, there are like robo-advisors that you can look into if you don't necessarily have the time. So I know Moneybox have an ISA, a stocks and shares ISA, where they get robo-advisors to invest on your behalf. There is Nutmeg as well. So there are a lot of options. These options are exploring potentially if you want to invest independently on your own. So if you look at Trading 212, for example, you can see that many of your orders will be, all of your orders will be free and unlimited. And you see the amount of stocks that you have available to you, which is over 2,500 and over 500 ETFs, which is exchange traded funds. When you look at Hargreaves Lansdown, you then see that they have over 8,000 stocks and over 1,000 ETFs. However, one of the things you need to think about is it's going to cost you £11.95 per trade. But there are times in my experience where I don't use Hargreaves Lansdown, but I know that there is a stock available or there are funds available on their platform that aren't on others. So depending on your level of research that you want to go into and what you want to invest into, you want to think about that as well. Then there's, of course, Revolut. So that's 3 free trades per month, unlimited with a £13 per month subscription. So as you can see, subscriptions are coming in thick and fast, even in the fintech world. Freetrade are doing the same thing. That's about £3 per month. So you want to think about, okay, how often am I going to be investing? And make sure, although you might say it's only £3 a month, that does end up costing about £36 a month. You have to ask, are you getting everything you need from that particular platform when it comes to investing? And what are the overall fees involved? Make sure you look into that, because as you can see here, foreign exchange fees, that's something that you want to look into to make sure that it's not costing you more than you need to. Is it the best platform for you? And then there's the DeGiro, and that's £1.75 to £5 per trade. So you want to think about that. But they do have a certain amount of stocks available. So this is where you want to be having conversations as well with seasoned investors and just talking about investing platforms and seeing what's available to you. I want to quickly talk about Vanguard as well. So Vanguard charges 0.15%, so 0.15% per annum of the value of your account holdings, including cash. So up to 250,000. So a maximum annual charge of £375. But remember, that is based on a 250k portfolio. So make sure that you are thinking about that and what platform is best for you. Give me one moment. I'm just going to check the chat function. Okay, I've used eToro. I'm seeing 212. eToro is a good one. I'll reserve comments. Someone's put GME, that's GameStop, since January 2021 about GameStop. Kaide said, I've used Vanguard as an intro to investing. Absolutely. I'd love to get into index funds a bit now. I love that Kemi spoke about Vanguard. Vanguard can be quite good. Absolutely. So I want to talk about 2 ways to make money from a stock. So when you buy stock, you own a share of the corporation. As a partial owner, you can make money in 2 ways. The first income you're likely to notice is dividend payments. Something to quickly note here is not all stocks offer dividend payments, but if it does, that's something to look at. So stocks that do offer dividends will pay out part of their profits to shareholders on a quarterly or annual basis. And the second way to make money from stocks is to sell them. So your profit, of course, is the difference between selling and buying minus any fees such as commission, which is why I spoke about the importance of understanding which platform you use. Let's say, for example, you made £1,000 profit on a stock, but if the fees are costing you a percentage, then you may say, if I only used a different platform, I wouldn't have to pay that. So make sure you're thinking about that. And profiting from the sale of a stock is a form of capital gains. So every year we get a limit, somebody please correct me if I'm wrong, of capital gains up to £12,500 a year per tax year. So that's something to think about as well. Any capital gains you're making, once you make it over a certain amount of money, which I believe is 12.5k, then you have to pay tax on top of that. Now, I want to talk about index funds because I've spoken about individual stocks, but I'll be honest, investing into individual stocks it's a lot more riskier, in my opinion. and index funds, it can sound intimidating, but it's literally a basket of stocks that represents a broad market. So in the case of an S&P 500 index fund, you're buying a small piece of 500 of the largest publicly traded US companies. And so this obviously means it results in automatic diversification, because if you have one stock versus a pool of 500 stocks, then you're not as affected by the movement in one. So it minimizes your risk overall. And it's important that there's no market timing or individual stock picking involved. As I said, that's the main advantage. So the fund simply tracks the performance of the stock index. And 3 reasons I think it's important to invest in index funds and research them if you haven't already are the low costs, it's passively managed, and portfolio diversification, as I said, and good returns. If you look at the returns of very popular index funds, I won't name any more, versus other funds that hedge funds do, you'll see that the returns tend to be better overall in particular index funds. So you want to make sure you look at that. Before we go into investing versus running a business, does anyone have any questions in regards to index funds or stocks? I'm about to check the Q&A function. Thank you. The capital gains allowance is 12,300. Okay, thank you. Invest using an ISA. So stocks and shares ISA as well. So if you invest using a stocks and shares ISA, then that means that you can put up to £20,000. Please correct me if the cap has changed on that. You can invest up to £20,000 a year into that, and any profit you make is yours up to £20,000 invested. So let's say you invest the full £20,000, and then that makes you a profit of, let's just say 10,000. You don't have to pay tax on that. So you want to make sure as well that you are choosing the right fund for you, and see if it's tax efficient. Thank you, 12,300. Let me check the Q&A function. I'm going to check the Q&A function first and get back to the chat. Excluding emergency funds, what percentage of people's money do you recommend we keep uninvested in stocks to essentially be free capital to invest for market crashes or huge drops in price? Now, while I wouldn't give advice on that necessarily, one of the things that my financial advisor has suggested is having some money spare where possible in the event that there is a market crash, or if there's a huge drop in price for any particular stocks or funds, because what that does is it just prepares you. So, and it just means that you have capital free. I couldn't say a particular percentage because it depends on your situation, and everyone's situation is completely different. But I know when, as a result of the pandemic, there was a market crash last year, a lot of people wish they had some capital that they'd left free. Now, something people do as well is they will just leave that in their portfolio. So even if, let's say, for example, you have £10,000 available in your portfolio, it doesn't mean you're using all of it. You might only be using up to 4,000 of that and leaving the rest there for if there is a dip in price in something, or if there is another market crash. What's your view on use of Wealthify to manage risk appetite? Apologies, and stocks or shares? I do like Wealthify. I think it's as good as the other platforms. I don't have any particular comments on Wealthify for any reason. I think they're just as good as the other platforms. I've actually heard very good things about Wealthify, and it's something that I want to do more research into, in all honesty. I think they're a great platform if you don't want to, of course, manage your funds yourself. Would you categorize crypto investing as inherently risky, given that it's outperformed the top stocks for the last decade or so consistently? I think the issue with cryptocurrency is it's currently, I keep saying it, it's too new and it's unregulated. I think anything that is new is going to naturally potentially come and beat the market because it's the latest craze. You have to look at NFTs as well and see that that's the latest craze. It doesn't necessarily mean that cryptocurrency isn't good or stocks aren't good either. But I think it is risky because if you lose all your money, you're not backed by anything or anybody. Nobody can get that money back for you. Whereas with stocks and with particular investment platforms. That's another thing to look for. Under the financial services compensation scheme, you are covered for up to £85,000. Now, that's not for all companies. Make sure that you are reading the T's and C's, and just check at the bottom of the website and you can find that out. Any advice on investment strategies that could help someone achieve financial freedom in 10 years or less? Financial freedom looks different to absolutely everybody. Financial freedom doesn't necessarily mean you stop working. So you need to define what financial freedom is to you. One of the investment strategies I spoke about just now is, which I've forgotten, apologies, because I've been talking so much, is the pound cost averaging strategy, which just means that every month you are putting in money regularly, and you will continue to see your investment go up as long as you're investing regularly. It seems the S&P 500 keeps on hitting new all-time highs, yet inflation is also at all-time highs. Is a big inevitable market crash on the way? This is a personal opinion. There will always be a market crash. It's just a question of when, which no one can predict. So yes, there will be a market crash. I just couldn't say when, in my opinion. And would a UK resident pay any tax for owning a property in Africa, whether they get rental income or not? That question, apologies, I can't answer. But I will say in general, it's hard to avoid tax. Right, reasons to invest in index funds, low costs. You don't pay tax on any profit made in an ISA. I wouldn't recommend any index funds personally, but I would talk about the fact that there's a great organization and community that you can join called Stock Pickers Academy, run by Debit and Osikita, and you can follow in the Telegram group. People talk about different stocks and sometimes index funds as well on there, and just do a bit of research. Sometimes I just Google and check, popular index funds and what have their returns been over the last, I don't know, 5 or 10 years, and see if that's something I want to follow long term. Right. Now, I quickly want to talk about investing versus running a business. And I'll start in the chat by asking you all, does any of you own a business? Let me know what type of business you do own. Sorry, someone said I'm getting the video. Is everyone? Can everyone hear me? Okay, fantastic. Reese said clothing brand. Thanks, Selena. Clothing brand and artist brand. Fantastic. I own a software company, a software as a service model. Amazing. Danny? Just to quickly go back to Marcia's question, she asked, can you do pound cost averaging into an index fund? Yes, you absolutely can. Of course, depending on how much you put in, then your returns will buffer according to the price you're putting in each time, which will change. But that's why it's called averaging, because it will average out. But you can absolutely do that on index funds. Right, I'm a personal shopper. Apologies, shopper. I own a software company. Someone said not yet, but hopefully soon. I'm hoping to start a software consulting business. Amazing. Clothing and self-published book. Congratulations. Now, still working on establishing a company. Investor in a licensed dog breeding business. Amazing. One of the things that I do quickly want to talk about is the fact that there's a big difference between investing in a business versus running a business. So I'm happy to answer any questions after this particular section in the Q&A, because I've run a business now for 6 years and it has been incredibly challenging, but I would love to be able to share any pearls of wisdom I can on how tough it can be at times and things to know. Everything isn't in these particular slides, but I'm sure as well that there is a breadth of wisdom that everyone could share within the chat function too. So let's start by talking about investing in businesses. So investing in businesses, so equity crowdfunding, it's about picking early stage and growth focused businesses that you think have the potential to grow. You invest money in them in exchange for a portion of their equity, meaning you buy shares in their business. So this is very different from when you hear that a company has done IPO, which is an initial public offering. That is completely different. And I would say that's probably when they are a lot more established. and then that's when they go on the public stock market. But right now, equity crowdfunding is more of a private experience when investing in businesses. So if a business that you've invested in succeeds, the shares that you own will become worth more than you paid for them, and you may be able to sell them for a profit or receive dividend payments in the future. So it depends on how the company and the business in question works. However, something as well to think is if the business fails, and many businesses do, you will lose some or all of your investment. I have to say and talk about the fact that this can also happen in stocks. It can happen in property as well, sort of negative equity. So it's, as they always say, capital is at risk. So I wouldn't necessarily just be put off by that, but think about your risk appetite, what you're putting in and what you can afford to lose. So the main risks, of course, if the business succeeds, your investment is likely to be illiquid. Even a successful investment will be locked in for a long time, often several years, while the business grows. So that's something you need to think about. If you decide you're going to invest in a business, so there's crowdfunding websites. I'm thinking straight away of Seeders, which did a fantastic job with BYP, and I know BYP will continue to excel throughout the years. Very excited for that. And there's others, Crowdcube as well. So if you decide I'm going to invest in a particular company, you have to think that you are not going to see the profit literally for quite a long time. In my opinion, when I've invested in businesses, it has honestly dropped to the back of my mind. I've made sure I've kept the paperwork in good placement, but I don't expect to see any gains, any physical gains for at least 10 years. So that's something you have to think about. And also the main risk as well is the risk of dilution. So if the business raises more capital later on, and most successful startups need to do to keep on going, the percentage of equity you hold in it will decrease relative to what you originally had. So that's something to think about. Something to think about in general. And the main way you can make money from your investments is selling your shares in the business for more than you paid for them. But as I said, at times it can be hard to get that money out, especially you want to look at all the terms and conditions and read through the documentation of potentially when you'd be able to get access to your money. And so I'll give you a quick example. I invested in Monzo many years ago, and I think my initial investment per share was about £7. Then I was told it's gone up to £13. And I was thinking that's fantastic, but it's not on the public stock market. So it's not as if to say I can go to one of the investment platforms I use and decide to sell. That's not how it works when you're investing in businesses that are still what are considered early stage. So this is something you want to think about that is very long term. Before I move on. Fantastic. Okay. I love that you all are connecting in here. Fantastic. And that you're finding it insightful. That's important. Now, I want to talk about running a business. So for some of you, you run your own businesses in here. And for those of you who are potentially thinking about it, there's so many things to think about. I will be asking you after this if you can use the chat function, and feel free to actually use it now to drop some gems of what you've learned from running a business. So one of the things you need to think about is you may need to bootstrap. So if you'll be giving up a regular wage to start your business, you need to ask yourself, do you have the flexibility to cope with fluctuations in your income? Make sure you can cover living expenses while the business takes off. I know some people who have had a business, but what they've had to do is they have a partner, for example, and their partner is covering the cost for both of them while the business is taking off. You want to think about these things and make sure that you're in a good position, or is everything independently on you? These are things to consider if you decide that you are going to give up a regular wage to start your business. I know a lot of people do both. They have their day job and then they have their side business for now. Sometimes the side business is literally supposed to be just that, something you keep on the side, but some people hope it turns into a primary source of income. But you just want to think about your time as well. Which is why it gets to an important question. Which is more important to you? Is it safeguarding your financial security or seeing your business grow? Which sounds like a toss-up, but everybody has different dreams and different visions for themselves. Some people say, I don't want to work for other people. As someone who runs a business, I'm here to tell you now very much you will be working for a lot of people. One of the people I'm working for right now is BYP. You will be working for a lot of people. So make sure that that's not the only reason that you're doing it. So I don't want to answer to other people, because you will be answering to a lot of people. And make sure your strategy for your business reflects your financial priorities as well. That's important. You may say, "Oh, I don't mind if the business doesn't make money for a while," but you have to think of how long is that, during what duration and period. It has to make sense for you. And even if it's not making money currently, you think, okay, what salary will you be drawing out of the business to make sure that your financial priorities are covered? This is one I really want to go into. Be ready to work very long hours. Doesn't say very there, but I'm telling you now, be ready to work very, very long hours. I work extremely long hours, and I'm here to tell you, running your own business, it's not a joke. There's always something that you have to make sure is done. You want to make sure that you're keeping all your finances in good order, that you have a good relationship with your lawyer, anyone who works for you, good relationship with your accountant as well. So these are things to think about. As well, you need to be able to cope well with pressure. A lot of decisions rest on you, if not all of them. Without going into too much detail, there are a lot of decisions I now have to make about my business and where it's going in the future, and those decisions rest on you. But look, it's better to be intentional and make a decision than nothing at all. Otherwise, nothing will change. But you have to be able to cope well with pressure. And this more sounds holistic, but it's very important. You're going to need determination and confidence. I cannot say that enough, because there'll be so many things that knock you back, and you have to ask yourself, how am I going to get back up again, and how am I going to deal with this? And as I said before, think about tax, legal, and professional costs. Trust me, those are the ones that always have bitten me in the past, but I'm learning, okay, this is how best to manage it. And I'm in better communication with my accountant. That is something that I say, when you have a business, for me personally, it's like me and my accountant come first, and then me and anyone legal comes second, or if not, it's joint first. But that's something you want to think about when running a business. Would love to start a business. Okay. Are there any other tips anyone would like to add? I can see from Reese, I tried to make a deal with an influencer with my t-shirt brand, and he took the shirt and blocked me. Trust is a lesson I've learned. Yes, very much so. You have to think about that. In all honesty, these days, I need a contract for everything. I do not take any money up front for anything. I want to be able to have a contract in place, which is why you need to have a good legal team in place, people that you can talk to regularly that say, if X is to happen, what does that mean? How do we proceed from there? So make sure that even if it's just very basic contracts and you're very early on with the business you're working with, that you have some contracts in place that just say, look, if I've delivered a service for you, this is what I expect to get in return. It's not always money, but you want to have something in place to ensure you are covered. Always include insurance. Yes, so if something gets lost or damaged, all parties are covered. Absolutely. Depends on the type of business you do. I know there's public liability insurance, professional indemnity insurance as well. So if you offer services, like myself, I offer services, that's where it varies. Now, a few questions. Let's see, Q&A. Right, I'll come back to some questions, but I'm going to answer these two. Would you advise running businesses with a loyal friend? One of the things that I want to really touch on about running a business with a friend or anyone is, people say who you get into business with it's basically like you become married, and you have to ask yourself, do you want to be married to that person? Because a business, there could potentially be no end date. You could potentially get funding, come into a lot of money, or lose a lot of money. And you have to ask yourself, through all of those circumstances, do you feel like both of you can make it through the other end with each other successfully? Do you feel like you can get through the highs and lows together? These are honest questions you need to ask yourself. Some people avoid it. I have seen it go terribly wrong personally, but I've also seen it be very successful. So it depends on what stories you're looking at, and everyone's situation with that is absolutely personal. So you really want to think about it. In my experience, I have been able to start, I would say, initiatives and projects with people and end them successfully and still have the friendship intact. But I personally wouldn't do a business with a loyal friend, because I would I would also feel, which is what's happened before, that the friendship would change. Everything might become a bit too businessy as opposed to, I'd say, just being authentic friends as well. What are some legal tax avoidance techniques you can use from business income or investing profits above 12.3K? I wouldn't be able to answer that question. Legal tax avoidance is also an interesting choice of words. From business income, you just remember that you pay, when you're a corporation, a limited company, you're paying tax on your profits. So that is something that I would say, remember you're paying tax on your profits. Make sure you're keeping track of all your expenses and they are for your business. What tips would you suggest for a silent partner? Tips for a silent partner, I would say question if you truly want to be silent, and look at the amount of rights that gives you within being part of a business as well. I can't give any particular tips, but I run a business with someone who is essentially somewhat of a silent partner. I just make sure our communication is aligned to get the business where it needs to. But yeah, those are the only tips I can say. But I in future, I would love to be more of a silent partner as well, so you can focus more on the business than people knowing that you're part of it. Last question before I move on to cryptocurrency. Also, would you advise a startup to consider paid ads as their fundamental means of advertisement, since majority of our youths are glued to social media these days? Would I advise a startup for paid ads? Once again, it depends on the type of business. What traction are you currently getting? Is that enough? If it's not enough, then you do want to then look at paid ads potentially. But I don't necessarily feel everyone hasn't used them. I have a business that some people have suggested using paid ads. I haven't used it yet, but it can work quite well for quite a few people. So I would potentially suggest it as a method, not necessarily the primary method, but something to look at and look into. Right. Cryptocurrency. So this was going to be more of a talking point than anything else. And cryptocurrency, just a bit like property, shared ownership, Help to Buy, it's absolutely subjective. There's a few things I'm going to cover, but most of this we're just going to have a conversation about. So please make sure that you're using the chat function. Let me know what you think in regards to cryptocurrency as well, and any questions you have, I will try my best to answer. Right. So 4 tips to get into cryptocurrency safely, to invest in crypto safely. Number 1, you want to research exchanges. There are over 500 exchanges. You want to research, review, and discuss. If you can, find a community. As I said, Stockmakers Academy, actually, they talk about cryptocurrency as well within the Telegram app. So that's something you want to think of. All of these exchanges are not safe and they're not secure. Some of them, they disappear for one reason or another, and they can disappear with your money. So you want to make sure that you are using one that is safe and that is secure, and potentially, I would say, more well-known, because the more well-known it is, the harder it is for them to just disappear and run away with your money. Which leads me to point 2 as well. You want to know how to store your digital currency, so you can use an exchange. So for example, there is Coinbase, and you can decide to invest in crypto and keep your money on there, or you can store your crypto in a digital wallet. So you want to look into that. That is when you are given like a unique code that you want to use and store your money in. But you want to be careful that you keep that security key and you keep the details of it very carefully. I know a lot of people who have lost access to that, which means they've lost access to their cryptocurrency. I know someone personally who has invested in blockchain. They do not know what their security key is. Sorry, I said blockchain. In Bitcoin, they don't know what their security key is. And as a result, they don't have access to the profits that they made over the years. That can happen to a lot of people as well. There's a lot of fraudulent activity when it comes to cryptocurrency. You don't want to be giving out any details from your digital wallet. You want to make sure you're keeping that secure. It's basically like giving out your password. You shouldn't do it to anyone, so please don't. Another thing I'll say is diversify your investments. Please do not put the majority of your savings into cryptocurrency. I cannot say this enough. Please do not do it, no matter how much and how well you think it's going to go. I know I've spoken about risk appetites earlier, but you want to make sure that you have some savings left on the basis that maybe there's been a fall in price, because as point 4 says, the crypto market is very volatile, and you don't want to say, yeah, I've used 70% of my money and put it into crypto, and yeah, I've put it into Bitcoin because I've heard it's the latest craze, but then when Bitcoin goes down, your heart plummets with it, or your mental well-being plummets with it. You want to make sure that you're doing what is best for you and your money. And as I said, number 4, prepare for volatility. If your investment portfolio, or as I said, mental well-being can't handle that, cryptocurrency might not be a wise choice for you. I cannot say this enough. You have to be careful with cryptocurrency. It is an incredibly new market. It is not regulated. And in some ways, I was actually on a call yesterday with the CEO of retail banking NatWest, and he made a good point. Why do you need your money to be running anonymously? That's something to look at. And crypto is a dangerous market because a lot of criminals use crypto because the money can't be tracked as easily as fiat currency, for example. So these are the things you want to look into. I would love to just check the chat function quickly about everyone's thoughts behind crypto. Health is wealth. Thank you. Thank you very much, Quado. I'm a great lecturer. Thank you for sharing these gems of wisdom. Thank you. I hope I'm saying your name right. I don't want to get it wrong. Finelli, hopefully I'm saying it right. I think it's fine to work hard, but avoid being too hard on oneself. Learn from people in our community and be healthy to manage the business in the long run. Sometimes we get so busy with starting a business, we neglect our health. Absolutely. And health is wealth, as Kaede said. Absolutely. That's very important. You want to make sure you're having enough downtime for yourself and looking after yourself as well. I wonder if there's any questions on cryptocurrency. I know Kelroy asked in the beginning, do you think central bank digital currencies would reduce the appeal of cryptocurrencies as investments? Yes, I think central banks and the traditional banks that we all know of are quite new to the cryptocurrency game, and they jumped on a bit late with digital currencies. But I don't necessarily think it will reduce it, because in all honesty, I think cryptocurrency and the market has become a beast in itself. There's advertisements every day for a new form of coin. In my opinion, a lot of these coins won't be here in the next decade. Some of them are here to stay, but it's up to you personally to decipher which ones you want to be involved in and which ones are likely to stay. But I actually don't think what the central banks are doing in terms of digital currencies will reduce the appeal of cryptocurrencies as investments. People are still making crazy returns, and I call them crazy because they are high risk investments, and you just want to be careful that people aren't offering you, yes, you're going to make 1,000% return on this cryptocurrency, because even if they do promise you that, you have to think, if I was to lose all of my money in this cryptocurrency, how upset would I be? So, and how much of my savings does it take away from? So please be careful with cryptocurrency in general. The same way I'd say be careful with investing in stocks and index funds and even property. There are so many things to look at and decipher and discern about, but you want to make sure you're doing what's right for you and you're not just chasing a hot tip. Let's see. I have been approached by friends to join the crypto community. Are there tutorials that you can suggest for me to go through? Thanks. In all honesty, YouTube. YouTube is the best place to learn about cryptocurrency, in my opinion. There's a few good channels out there, but there's just so much information when it comes to cryptocurrency. But yes, YouTube would be a fantastic place to start. Right, I understand we have 4 minutes left. I believe that is my last slide. So I just wanted to say thank you all so much for listening to my presentation. I hope it has been helpful and given you some insight about different ways you can create financial freedom for yourself. Please remember to take the stats and facts into consideration everything from, if you don't have a property yet and you want one, 34 is the average age. The fact that 33% of people are invested into stocks, more and more people are getting into cryptocurrency. There are so many different ways now that you can boost your income, but of course, all of it comes with risk and your capital being at risk. So make sure you're doing what's right for you and you're not just necessarily following what a particular community does. Does anyone have any questions? Brilliant, thank you. I'm so glad it was insightful. Yes. Yeah, okay. Thank you, Barbara. That's a fantastic tip. I hope you've all seen it. If you want to hear more about financial growth and best mortgages, make sure you head to the Habito Expo booth for more insights. Lovely, lovely. Everyone feel free to connect on LinkedIn. Yeah, build a network. Absolutely. Q&A. I think that's all the questions. Yes, it has been. I want to thank you all so much. I hope you enjoyed this. I continue to wish you the best with your finances, and hopefully I will see you around for more BYP events in the future.